Trading will ruin your life if you don't follow a simple set of rules. Trading will ruin your life if you just don't follow a simple strategy. If you just go off on a tangent and you don't have a business plan, your life is going to turn to shatters if you get into trading. There's a few things that you need to know, a few simple things that you need to know before you get into trading. I know that you've been looking at all these videos, you've been watching all the YouTube videos, not just mine, because otherwise why would you be here? You're out there, you're looking for that golden nugget, you're looking for that best strategy, that best system that's gonna take you to the next level because you saw someone tell you that you're gonna make millions out of trading, that you're gonna turn $5 into $100,000 in a week somehow. You need to know a few truths and you need to know them now, because you are going to ruin your life if you do not know these things. Guys, I've been doing this for 33 years, and those of you who don't know me, I'm Rob, and for those of you who do know me, I am still Rob. It's Coffee with Rob. We're having some coffee, and then I'm going to take you to the charts quickly, and I'm going to show you a system that we use before we actually take it to a strategy. I'm going to show you the price action system and how you can take a trade. But before we go there, you need to know that trading is insanely risky. 60 to 80% of traders do lose money on a regular basis trading this way with leverage trading. 99% of traders lose money day trading on 5-minute charts and 1-minute charts. And I know you think you're going to be part of that 1% that's going to win, but in all likelihood, probably not. Why do I say your life's going to get ruined with trading? Well, here's the thing. What normally happens, you go out there and you see these guys promoting a course, teaching you're going to turn $100 into $1 million, and it seems attractive to you. So you go and you do the course, you spend the money on the course, which costs you a lot of money to start with. You spend the money, you go out there, you take the course. Course is wonderful. It teaches you all about these charts, it teaches you all about these lines, and it teaches you all about if you just follow this one pattern and this one simple set of rules, then you're going to have a win rate and you're going to make loads and loads and loads of money in the markets, on Forex, on crypto, on indexes, on shares, whatever the case may be. They don't teach you that it's all about the psychology, that it's all in the mind, that it's all about you. They teach you that you can just follow this simple charting system and you're going to make loads of money. So you do the demos and you follow the process and you do really well at it, and you realize, you look at this and you think, well, you know what? This is really simple. This is really easy. This is easy money. This is probably the easiest way to make money that I've ever seen. Nobody tells you that it's actually the most difficult way to make a living that anybody's ever seen. You might ask why that is. Because when you go on the course, when you look at the charts and when you look at what's in front of you, even when I show you a chart, I'm going to show you how you can take a trade and you're going to think, well, that's easy. I can do that. But then you go back and you put your hard-earned money in and suddenly you start losing and you start wondering why. Now, I've seen many a life ruined by this. You go straight back, you take your pension, or you take those life savings or that retrenchment package, or maybe you lost your job and they gave you a big package of money and you've got all this money. Maybe you sold your business and you got this big package of money and you just want to do something with this money. So instead of investing it in shares and set and forget, you decide now you're going to start trading because someone told you that trading is going to make you a lot of money. So you take these hundreds of thousands of dollars that you got and you put it into leverage trading in the market. Nobody cares about you. The brokers you're trading with don't care about you. Nobody cares about you. Everyone warns you. Everyone tells you that 60 to 80% of traders lose money. But of course you don't believe that. You reckon, well, I'll be in the top 30%. I'll be fine, won't I? Because that's human nature. That's what we always believe. Trouble is, that's not the case. It's never the case, especially if you're new. Why when you're a new trader and you're just getting into trading, why would you believe with no business plan, by the way, that you're somehow going to beat pros that have been in the market for I don't know how many years, guys sitting on the desk trading millions of dollars for companies that have actually got some kind of degree in finance and trading. Yet you believe you're going to get into trading tomorrow as a retail trader with your long lost pension or whatever it might be, and suddenly start beating everybody at trading. Have you ever thought about this? Have you ever thought about it logically? Now, I've seen so many people ruined by this, and the money just flows out the door, and you don't know what happened. You don't understand why it happened. And the reason why it happened, I'm going to tell you after we've been to the charts. First, let's go and have a look at the charts, and let's look at a system that you can use in your trading to help you stay profitable. And I'm also going to give you an idea to stop you from risking your hard-earned money immediately in the markets before you know how to trade. And this doesn't mean a demo, because demos, that doesn't help you because there's no risk involved in a demo. But first, let's go and have a look at the charts. We'll have a look at the charts and then we'll take it from there. So here we are on the charts. The charts now show you effectively how you can place a trade. Now we trade with price action, so we don't have too many indicators on the charts. There are different schools of thought when it comes to charting. What I will normally do to take a level is take it to the day chart, put it on a line chart, take a daily support and resistance level and work from there. But I'm just going to show you how we trade. I'm just going to give you a good idea of the easiest way to trade. We trade three ways. We trade with the trend. The trend is your friend, is the first way we trade. And I think this DAX here will show you better. There's your trend. It's in a trend. It's a bullish trend. Bullish means up, bearish means down. There you go. She's going up. Every time it hits the bottom, you can buy. Every time it hits the top, you can sell. Every time it hits the bottom, you can buy. Every time it hits the top, you can sell. The moment it's a buy, it's going to the upside. That is trading in the trend. The second way that we trade in a range. In other words, we take the resistance level, we take the support level. We note that the product is trading within that price range. It's up, it's down, it's up, it's down, it's up, it's down. But then it breaks out. This is the third way we trade. Break of structure. Now I'll show you this on a trend as well. If it breaks on the resistance line here, it's the same thing. Break of structure, it breaks to the upside. Solid green candle going to the upside. You can have it on a breakdown as well with a solid red candle. So now you've got a solid breakup with a solid green candle here. Now you could, to prevent fake outs as they call it, all these fancy words in the market that you don't need, it comes back and retests. You can wait for that retest and take it on the next green candle out, giving you the long trade. Or you can be like me and not wait for retests and just take the trade as it comes out of the level, giving you the breakout past the prior high. It broke past the prior high, gives you the trade, you take the trade, that's going long. When it comes back to retest, you don't panic, it comes back, it retests, and it goes to the upside. Then all you have to do is manage the trade with a good business plan and a good strategy, which I will talk to you about in a moment. There's the stop loss, there's the strategy, there's the take profit, there's the strategy. We'll get to that in just a moment. But that's a breakout strategy on a straight resistance level. We also have breakouts. Euro, US dollar, actually called this long this morning. So here we have a bearish trend going down. We have a trend resistance, and there you have the green candle breaking to the upside on the bearish trend. So this will be a break of structure. Now, the reason we have the retest scenario, which I showed you a moment ago, where it comes back to retest and then you take the trade, is because, as you can see, a couple of times before, you've got these tails here, which shows that that was faked. It went out and it came sliding back in. It went out, came sliding back in. All you have to do to prevent that is wait for the candle to close. So there's your three ways to trade. Trade in the trend, trade in the range, trade on a breakout. And once you get that, trading becomes rather simple. One of my favorite ways to trade is actually on the breakout, because breakout normally gives you a good run to the other side of the trade, and it gives you good information on any given trade. Guys, let's go and talk about a little bit more about strategy. Let's go and talk about why your life could get ruined when you're trading. Let's go over and carry on with that. It looks easy, doesn't it? It looks like something that you could do with extreme ease. That's trading. There's 3 ways that you trade, and you just follow those rules and you trade. But then you go home and you put your hard-earned money into the market, and suddenly you start losing, and you think, well, that's a bit off. And it's generally because you didn't understand that you would have FOMO, which is fear of missing out. You didn't understand that you would be impatient. You wouldn't be able to sit on your hands and wait for the trades to play out. You didn't understand that there's a thing in your mind called fear. And when you put money in the market, when you start trading with real money, suddenly that fear kicks in and it starts to affect the way you trade. So what actually starts happening is you start making bigger losses and you start taking smaller wins. In other words, you start trading the wrong way around. You get into a trade, win a couple of trades, get into a trade, goes into a loss. And when it goes into that loss, you think, well, I don't want to be losing. I actually want to be winning. So I'm going to dollar cost average that trade and make it a little bit bigger so that it can come back to the cost and I can get my money back. Because for some other unknown fundamental reason, human beings can't see themselves ever losing. In other words, you've got to sort of win 100% of your trades. So you haven't figured out that you're actually going to lose some trades, and then you end up taking a massive gargantuan loss. People can only take so much on one trade. There's a threshold that everyone's got on a loss where you will eventually get out of that trade. If people do have a stop loss in place, they tend to move the stop loss away. Heaven alone knows why. Because you put it there for a reason. Perhaps you just put it there for show. I actually don't know. It's supposed to be there for a good, positive reason. It's not there for a reason. You're wasting your time. You're wasting everyone's time. Stop loss. Yeah. How do you manage the stop loss? How do you work a business plan? It's easy. What you got to think about. If I was to toss a coin 10 times, in all likelihood, it'll land on tails 5 times. In all likelihood, it'll land on heads 5 times. But if I told you for every time it lands on heads, I'll give you 2. For every time it lands on tails, I'll take away 1. I don't know anyone who wouldn't choose heads, because the odds would be in your favor, wouldn't it? Now, this is how you apply your trading. I'm just going to give you a quick, simple run over of the strategy, as I do in every single one of my videos. I tell you how to apply the strategy. I've had people tell me that they don't know what the strategy is. And I think to myself, how's that even possible? Because I tell you the strategy in every single video. And it's the simplest 2-3 step strategy that you could ever think of. You don't need a 1,000-page business plan, guys. You don't need to write a book. You just need to follow these simple rules. And the first one is keep your stop loss the same on every single trade. Don't change it. Don't change the amount of your stop loss. Keep your account size the same and your stop loss the same. If you've got a $25,000 account, don't let it grow to $30,000 and leave it there and start trading on a keep it as a $25,000 account. Take your profits out. That's as simple as it gets. Now, let's say you want to make a stop loss. What size should I use? Some people use 2%. Some people use 0.5%. I use 1% of the account. My reasoning for using 1% of the account is simple. That is, if I lose 10 trades, I lose 10% of my account, easily recoverable if need be. The chances of losing 10 trades in a row should be pretty slim. You're losing 10 trades in a row, you need to stop. Take a step back and think about what you're doing wrong, because something's wrong. Now, 1% of the account, so if it's a $25,000 account, it would be $250. Easy. So now you've decided what your risk amount is on every single trade that you take on that account. Here's the point. It doesn't have to be exactly to the point $250. I know there's a few OCD people out there. Guys, relax. Calm down. It can be 220. It can be 270. It doesn't have to be on the nose. It just has to be really close, not way out. You've got to try and keep it as close as possible to that amount so that your losses are negated by that size. Now what you do is you go and you look at your trade and you say, where would I want my stop loss on this trade? And I've heard so many people tell me, I want a close stop loss. I want a far stop loss. I want it away. No. That's not how we work with stop loss. What we do is we look at the trade and we say, if the price gets to that point, then my trade's invalid. It's worthless. It's not going in my favor. That's where I want my stop loss. Then all I do is I work out how many lots, how many contracts, how many pips it will take me to get back to the cost level. Now I've got the size of my trade. Then I just need to look at the whole picture, the whole chart, and say, will this make me more than $250? It doesn't need to be exactly 2-to-1. It doesn't need to be 4-to-1. In fact, if it's a 1-to-1 trade, you're pretty much on a winning streak. You're in the right track, as long as it's more than what you're losing. It's insanity to risk $250 for a possible $50 profit. That is, wow. And where do you even get that from? No, you've got to make more on your wins and lose less on your losses. The more you can make on your wins, the bigger the win you can make with the possibility of that trade, the better. And when it goes into profit, you understand already that this trade was costing you $250. And if it goes into a decent profit, take your stop loss up and move it into cost. Now the trade's free. It's not costing you a cent. And when it gets close to your take profit, move the stop loss up right behind it on a trailing stop and push the take profit away. And try and run with your profitable trades instead of running with your losing trades, because I know that's what you're doing at the moment. You're running with your losing trades, aren't you? You always do that. Guys, if you don't follow those simple set of rules, don't tell me they're complicated, simple set of rules, trading will ruin your life. If you only follow the charts, and if you only follow what everyone tells you, just follow the charts and have a win rate and make millions and pay $100, and it'll ruin your life. It'll take all your money and you'll be in trouble. You'll be in big trouble. The most important aspect of your trading and getting into trading has got to be control, managing that risk, managing your portfolio, and staying in the game. What are you going to do if the only thing you've got in the world, the only amount of money you've got in the world is, let's say it's $100,000. I don't know. It could be $1 million. It could be 10 million. I don't know. But let's say it's $100,000. This is all you've got in the world, $100,000. And you've decided, well, I know I'm not going to be able to survive on $100,000 for the rest of my life, so I'm going to try and turn it into something with the markets. What is your plan B if you lose all that money? What happens if you lose all that money? That's a nightmare, isn't it? So, as I said to you, my plan is as follows for people. What I normally tell guys is, if you're new to the markets, demo is not going to help you, because demo, what it does is it gives you a false sense of security, because you're not really putting any risk out there. You're not really putting any risk into the market. So you don't really feel the loss. So you learn how to work with the charts, but you don't really learn how to work with the money. So for a long time, I hated prop firms and funded accounts. As far as I was concerned, they were all a load of rubbish. And last year, I started to warm up to them, and I realized, hang on, they can actually be quite useful, particularly to new traders in the market, to give you a little bit of responsibility with the money. In other words, you buy a funded account. It costs you some money. There's some risk involved. The other bit of risk involved is that you want to succeed with that so you can get a profit share from that account. And now I warmed up to these funded accounts as they're a useful tool for the in-between of you've learned how to trade, you've done the demo. Now you go into a funded account. Your only risk is what you paid for the account and not getting those profits that you wanted to get out of the account. Let's say you bought a $100,000 account, and now you lose the account. It kind of feels, you feel the pain because you lost that, and then maybe you had a couple of $1,000 profit on it, and you lost it, and then that can be painful. But it wasn't really your hard-earned cash. You just invested maybe $500 or $900 at the account, and that's all you've lost. You've still got the other $99,000 that you got for your pension. Take that pension amount, make sure it's safely invested and it's comfortable. And then you trade these funded accounts until you are comfortable, until you've learned how to manage your risk, until you've learned how to trade and you've learned how to make a lot of money. And you know that you can be a profitable trader. You can do this well now. You can succeed at this by doing this. Then you can open your cash account, start putting your cash in there, start trading with it. Don't put the whole 100 grand in, guys. Start with smaller amounts. Start trading a 20 grand account or something like that and see how it goes. Because although you've already figured out that you're quite successful, doesn't mean you still will be. It might become even more tricky when you get to the real cash, because the real psychology tells when you've got everything on the line, when you've got your last money on the line, that's when the real psychology comes home to haunt you, and it becomes extremely tricky to trade. Listen to me carefully, guys. I'm not BSing you here. I'm giving you the facts of where this can take you. I'm not a psychologist. My daughter is, but I'm not. So I can't give you psychological advice. I can't give you any advice, in fact. All I can tell you is the way I look at things and the way it's worked for me in the last 33 years. The aha moments that I came to were the charts aren't going to make you money. Systems aren't going to make you money. Win rates are not going to make you money. The only thing that's going to make you money is you and your business plan and your strategy, and being able to get over the fear. And then you'll get to the point where you'll be able to make some dosh in the market. Guys, don't forget to join the members area where you get a trade of the day every day and a few other perks. And, you know, if you get to, there isn't even a point there where there's WhatsApp contact with me and that sort of thing. So join that, enjoy that. But subscribe, like, stay with the channel, join us for the live shows on Tuesday and Thursday, and have a bit of fun where I go over training on a regular basis. And if you're insane enough to remain a trader after watching this video and stay in the game, then stay with the channel and we'll do this together, and we'll see if we can get you profitable and making money in the markets. Thanks for watching, guys. Till the next one, don't forget to watch the last video, which also talks a lot about the systems and strategy and gives you insight into the markets. Cheers, ciao, and keep your feet on the ground, reach for the sky. Bye.